Bitcoin. It's been the #1 investment of the past decade. It's beat out stocks, bonds, gold, and pretty much anything that you could possibly think of. A couple $1,000s invested into Bitcoin just a few years ago would have already 10x'd in value. In fact, it's already up 3 times in value since the beginning of 2019. Here's the facts. Housing prices are skyrocketing. College tuition is skyrocketing. Medicare is failing. Social Security is failing. For millennials, Generation Zs, and anyone that's born today onwards, Bitcoin and cryptocurrencies are the new pensions. Eventually, everything we know, from car titles to real estate, will be digitized and put onto the blockchain. Learning how to navigate the world of cryptocurrencies and understanding how to safely invest into cryptocurrencies for the long run may set you up for an early retirement and financial freedom. What's going on, guys? It's Lewis here with Cryptolete, and today I have something very special for you. Today I'm going to give you a crash course into investing and trading Bitcoin and cryptocurrencies. Before I get started, I just want to give a shout out to CryptoRaise, who are the sponsors of this video. And side note, I created CryptoRaise because I am in front of the computer basically 24/7 now. My eyes hurt, so I wear these CryptoRaise blue blocking glasses. They come in the orange frame and they come in a clear frame like this. So I wear my CryptoRaise when I'm in front of the computer. It blocks all the blue light and my eyes feel much better. I can stay in front of the computer for a very long period of time and not get dry, tired eyes, or digital eye strain. So definitely check out CryptoRaise at getcryptoraise.com. I'll put a link in the description below. Now, back to the topic at hand, investing and trading cryptocurrencies. Some of the stuff that you're gonna learn in this video, it actually took me years to figure out. It took me a lot of reading different books, knowledge, and understanding investments and different topics. And because cryptocurrencies are still relatively new, you are actually going to be one of the very first people to learn about these companies and some of the strategies that I use to invest into cryptocurrencies for the long run. So stay tuned, get out your pen and paper, take notes. This presentation is a longer one, but it is vitally important. It goes over all of the fundamentals that you need to know, and it goes over different strategies and honestly so much. So check it out and let me know what you think in the comments below. I would love to hear your feedback. I'm gonna have a lot more videos like this going into even more detail. So be sure to subscribe. And remember, smash that like button as hard as you can. So without further ado, I'm gonna take myself off the screen and we're gonna get into the presentation. All right, guys, here's the presentation, how to trade and invest into Bitcoin and cryptocurrencies. It's by Cryptolete, myself, Lewis, and you should follow me on social at Cryptolete on Instagram and on Twitter at Lewis Raskin. So that's just my name on Twitter. That I give out a lot of good trades there, and on Facebook at Cryptolete. This is going to be a complete overview of investing and trading into cryptocurrencies for beginners. You can take the free crypto beginner course over at free.cryptolete.com, and you could also read the blog and watch the training videos at blog.cryptolete.com. I also offer a crypto mastery course at cryptolete.com, and you can get complete access to the complete trading and investing course, one-on-one mentorship, the VIP Telegram channel, trade signals, cheat sheets for trading, and a lot more over at cryptolete.com. We'd love for you to join the Cryptolete community and start your journey to financial freedom through cryptocurrency today. So let's get into this presentation. Over the past few years, cryptocurrencies have continued to gain more and more popularity. There's no doubt that the largest group of people getting into the space are millennials and the younger generation. Because crypto is bringing so many people into the world of finance, many are brand new to investing and trading. This video will be an overview of trading and investing into cryptocurrencies. This post will cover market fundamentals, investing styles, trading styles, fundamental analysis, technical analysis, trading systems, market sentiment, risk management, and good record keeping. And within this presentation, I will provide a huge discount for the Cryptolete VIP and Cryptolete Crypto Mastery course. So definitely watch this presentation if you want that incredible discount that will only be provided in this presentation. And then at the end, I will go over a trading example showing you exactly how I trade so you could actually see it all set up step by step. Just as a disclaimer, nothing in this presentation or any presentation or media by Louis Raskin or Cryptolete is investment advice. It is not personal advice, it is not financial advice, and it is not legal advice. Everything is for entertainment and educational purposes only. Louis Raskin and Cryptolete are not financial advisors or trading advisors or investment advisors. You should always consult with a professional before making any decisions. Trading and investing in cryptocurrencies is very, very risky. Profits are not guaranteed. You can lose all your money. Past performance is not indicative of future results. Never trade or invest money you are not willing to lose. Of course, I do talk about risk management and how to mitigate your risk, but at the end of the day, what you decide to do with your money is your decision. So with that out of the way, let's get to it. If you want to be a successful trader, you have to educate yourself and practice. You can't just jump into trading without knowing anything and be successful long term. Remember, 95% of traders fail. This is because most people don't study, don't practice, and don't stick with it. If you jump into trading without studying and practicing it, that's like going into a poker tournament without knowing how to play well. The pros will demolish you if you did that. In trading, the whales and market makers will wreck you if you don't know what you're doing. In this post, we'll start with the absolute basics of trading and investing, and we will work our way up. Because you might realize in this post that you might not even want to trade. You might want to stick to investing because investing actually shows to have just as good or greater returns in the long run. So let's go into the market fundamentals. In order for there to be a market, there needs to be buyers and there needs to be sellers. Buyers and sellers create the dynamic of supply and demand. The sellers own the product, so they have the supply. Buyers want the product, so they create the demand. Just like at an auction, buyers bid for a product. Sellers ask for a certain price. The actual price of an asset is determined when buyers and sellers both agree upon the value of it and the buyer purchases the asset from the seller. If the buyers and the sellers can't agree upon the value of an asset, or in other words, if the price that the buyers bid at and the price that the sellers ask for don't match, then the price won't move until either a buyer increases the amount he's willing to pay or a seller decreases the amount he's willing to sell his asset at. In a market without a lot of volume, you can actually see the price stagnate for long periods of time until either a buyer increases his bid or a seller lowers his ask. When there are more buyers than sellers, the demand for a product increases. As the buyers continue to buy at the prices that are being asked for by the sellers raise their prices and the price goes up. When there are no more buyers, the demand decreases. As demand decreases, sellers are left carrying their supply that no one wants. If they want to sell it, they would need to lower their asking price to one that a buyer would agree upon. This lowers the price of the asset. An asset's price can move up or down for various reasons. Something may have fundamentally changed about the coin or the company, spurring buyers or sellers to take action, or it may be that someone who has a lot of supply simply wants to sell and invest into something else. For the most part, price is controlled by large players called whales, who set predetermined price levels to buy and to sell. Whales and institutions are excellent at using market psychology to get people to buy and to sell. As a trader, you have to respond to these market movers. This constant battle between the buyers, also called the bulls, and the sellers, also called the bears, moves the price up and down. The name bulls actually comes from how bulls swing their head up when they attack. Bulls, they want the price to move up. When the price moves up continually over time, it's in a bull market. The name bears comes from how bears swipe down with their claws and they attack. Bears want the price to move down. When the price moves down continually over time, that is known as a bear market. The price is put into a chart and people look at it as it moves up and moves down, and they guess where it will go next. Many times you can see into the future by using what's known as technical analysis to analyze the charts and make predictions from the price action. This works because it's a self-fulfilling prophecy. Basically what that means is that when enough traders look at the price of something and they see particular levels of interest, they will put enough money around these areas that something tends to happen. Now, sometimes whales and market makers just absolutely destroy traders and market participants by issuing huge orders that move the market and catch every retail trader off guard. There's not really anything you could do about these situations unless you have insider information. Even with that happening though, you could still make money using fundamental and technical analysis to trade. By understanding both fundamental and technical analysis, also known as FA and TA, you could perform well in the markets. We'll go into FA and TA in a minute. But first, you need to know the differences between investing and trading, because you might want, like I said in the beginning, you might want to actually just invest, and that might be your strategy. And you might want to do some certain types of trading and not other types of trading. So let's cover investing and trading now. So investing. When most people talk about investing, they're referring to putting their money into something and not touching it for long periods of time. This could be a year, it could be 5 years, a decade, or it could even be decades. Some even invest with the intention to never cash out so they can create generational wealth for their family. Some investments have things called dividends and payouts. So people actually invest and then they never actually touch the principal, but they only spend the payouts or the dividends that they actually receive from their investments. And that is an amazing strategy to have. The thing is, when you invest, you should be okay with losing whatever you put in. The same thing actually goes for trading, although with trading, you can actually protect your capital a lot better. You should also be okay with holding through the ups and the downs. And that's really important because when you invest into something, the market will go up, it will go down, and it will go sideways. It will go all over the place. And it's really important that you don't get scared and just quit, or you don't FOMO and buy even more when it's going really, really high. There's a lot of different strategies, and we're going to go over all of them right now. Investments, what they're doing is investments. They're put into projects that are projected to have long-term growth. That's why you invest into things, because you think that over time it's going to go up. Investing, what it is it's more of a hands-off approach. If you have a good job that makes you a decent salary, simply investing your money into a solid project or solid projects or index funds can create incredible returns, essentially without doing any work other than the initial research and figuring out how to invest in the first place. If you don't have the time or inclination to learn how to trade, investing is an incredible strategy you can use to generate wealth. In fact, it is highly recommended that everyone, even traders, have an investment account. Personally, I take all of my profits that I make from trading and I put them into my investment account into projects that I believe have long-term potential. I have a very big investment account, and my trading account is actually much smaller than my investment account because I think that a few projects, like Bitcoin and a couple others, will actually do really, really well over the long run. And I just don't want to miss out on that. So I just put money in and I don't touch it. And then I have a separate account for trading. So when you're actually investing, there's a few different ways to do it. There's actually 4 different ways, 4 different strategies that you could use to invest. The first one is called dollar cost averaging. Now, dollar cost averaging is the process of investing a set amount of money into a project, a coin, a cryptocurrency, an index fund, whatever, each day, each week, or each month, regardless of the price. It doesn't matter what the price is. You simply invest and you don't think about it. When you dollar cost average, you end up averaging out your buys to a reasonable level. If you would have bought $10 of Bitcoin every single week for the past 2 years, you would have turned $1,050 into $1,485. So you'd be up over 40% right now. You won't catch the bottoms and you won't catch the tops, but you'll have a nice entry that over time will continue to get better and better. Dollar cost averaging is a time-tested, proven strategy that guarantees profits over the long run if the project you invest in continues to have sustained growth over the long term. You can set up recurring buys on many exchanges, including Coinbase. And you can also set up recurring buys on one of my favorite apps. Actually, it is my favorite app. It's called Snowball, and we will get into that in just a minute. The second way that you can actually dollar cost average or invest, the second investment strategy, is called weighted dollar cost averaging. And this is actually even better than just dollar cost averaging normally. Weighted dollar cost averaging is the process of investing money into a project each day, each week, or each month, regardless of the price, just like dollar cost averaging is. But with weighted dollar cost averaging, you have the addition of adding more as the price decreases in value. By adding more to a project as the price falls, you will lower your average buying price. And this is by far the best investment strategy you can take when it comes to long-term investing, in my opinion. It's either this, or if you happen to get in at the bottom of the market and you somehow time it, then just putting it all in, at the bottom is great, but it's very, very difficult to time it. And with dollar cost averaging and weighted dollar cost averaging, if you were to have done this, even if you were to have bought Bitcoin, say at 19,000 at the very top, 19, 20,000, and you just dollar cost averaged your way in every single week, you'd have an average buy-in price of around $4,000 to $5,000 per Bitcoin. So you would have essentially doubled your money at this point, and probably, a lot more than that down the road. So dollar cost averaging, and in particular weighted dollar cost averaging, is an incredibly good tactic and strategy. It is what I personally use. It is what is being taught in the Crypto Mastery course. And it is something that I tell people to look into when they are deciding how they should be investing. The third investment strategy is to split your investments into chunks. So this is where you have a set amount that you intend to put into a project or a index fund or whatever, and you split that amount. You split that amount up into however many parts you want. So let's say you have $10,000 to invest. What you would do with this strategy is you would divide it into, say, 10 purchases of $1,000 each. This differs from dollar cost averaging because you have a set amount that you start with and a set amount of payments that you decide to make. Also, with this strategy, using technical analysis could come in handy. You may decide to only invest your chunks at key levels, such as only at supports, to try to get the best entries. And finally, there's the fourth investment strategy, which is the all-in approach. Now, this is where you take all of your available capital and you just invest it all at once in one big chunk. This is highly inadvisable, and it's not a recommended investment strategy, except for under certain conditions where you have really, really good fundamental reasons that something should go up when it has crashed. You never really know what the market will do, though, so the all-in approach isn't necessarily the best strategy. If you are going to invest into a project, crypto, and index fund, it is imperative that you do your due diligence and you do understand the fundamentals behind what you're investing into. Because especially in the crypto space, there's a lot of what they call shit coins, which are cryptocurrencies that basically are fly-by-night cryptocurrencies. They don't have a project. They're not a real hardworking team, and they're just going to zero, basically. So you really want to make sure that you're protected from these type of things. Now, this is actually where I want to introduce my favorite app, Snowball Money. Snowball Money lets you invest into bundles of cryptocurrencies that have proven themselves, that do have good teams, and that have gone up over time. I really like Snowball Money because they're doing something that is very empowering to the average person. What they're doing is letting the average retail investor invest into portfolios that were previously only available to the ultra rich and accredited investors making at least $200,000 a year for the past 2 years. Snowball Money is taking the tried and true investment strategy that Warren Buffett himself recommends, and it is bringing that into the world of crypto. In 2007, Warren Buffett made $1 million bet saying that if you were to put your money into a standard index fund, which is simply a collection of different quality stocks, all bundled together into one fund, one index, and you did that, and you just put your money into that index, and you did absolutely nothing for 10 years, you would outperform over 90% of all active fund managers, traders, hedge funds, etc., etc. He made that bet in 2007. In 2017, Warren Buffett won that bet. Investing into a simple index tends to outperform over 90% of actively managed portfolios. If that's the case, then a sound investment strategy could be as easy and simple as investing into an index and leaving it alone. Before Snowball Money, investing into a cryptocurrency index was only available to people with millions of dollars. Snowball opens up the strategy to the masses by allowing anyone to invest into a cryptocurrency index. They even include an option for automatic monthly deposits. For anyone who is either too lazy or simply doesn't have the time to learn how to create a diversified portfolio in crypto and then rebalance it on different occasions, Snowball is the place where they can invest into a crypto index with about 3 clicks. All that you have to do is sign up, link your bank account, pick which index you want to invest in, and then set up your reoccurring deposits. That's it. I've been using it for about a month now and definitely feel that it is a great service to the world and a solid investment app. If you want to download snowball.money and start snowballing and compounding your money with cryptocurrency indices today, download the app and use the code that is on the screen, SASBQDWN, and you'll be eligible to get $10 when you make your first deposit. I'll have a link below and in this post, so definitely sign up and make your first deposit today. And now that we've covered investing, it's time for us to go into trading and cover trading and all of the basics. This is probably something that you are here for, so let's get right into it. So trading. Trading is different than investing. Trading is much more short term. When you are investing, you don't really care about the fluctuations in the price because your investments are staying in the asset long term. Traders aim to take advantage of the price fluctuations by buying low, selling high, and repeating the process. They want to make profit off the shorter term moves. When trading, knowing about the fundamentals of a project many times isn't actually even necessary, as you are trading solely off of the price and aim to exit your trade in a timely manner. Trading effectively over a long period of time requires massive amounts of dedication. If everyone could just come in and make money in the markets, then everyone would be rich. As you know, it's not that easy. Traders don't predict the future. What they do is they look for probabilities and they trade them. Sometimes the trades end up working out and other times they don't. An easy way to think of how trading works is to think of the roulette table at a casino. In the game of roulette, there are 18 red spots and 18 black spots. That means that if you bet on either red or black, that makes 50-50 odds of winning. If you're a casino, these odds aren't very good. So, casinos add 2 green spots to each roulette board, the 0 and the 00. This means that if you bet on red or black, your odds of winning are not 18 out of 36, which is 50-50, but rather they're 18 out of 38. This is because there are 18 red, 18 black, and 2 green spots. This means that if you bet on red or black, you have an 18 out of 38 chance, which equals 47.3%, and that's your chance of winning. While the casino has a 20 out of 38 chance of winning, which equals 52.7%. This difference of 5.4% between your chances of winning and the casino's chances of winning is the casino's edge against the gambler. Over enough spins of the wheel, the casino will come out winning 5.4% of all of the money that is bet. If, over a long period of time, $100 is bet, the casino will make 5.4% or $5.40. Obviously, much more than $100 is bet on a roulette table. In fact, millions of dollars are bet on roulette tables in casinos. For each $1 million that is bet, the 5.4% edge of the casino equates to $54,000 in profits. The casino will win many spins of the wheel, and they'll lose many spins of the wheel. But in the end, they come out on top. And that is how the house always wins. This is similar to trading in that traders don't win every trade, but if they have an edge, just like how the casino has an edge, they'll come out on top after enough trades. The cool thing about trading, though, is that your edge could be a lot higher than the casino's 5.4% in the example that we gave. You might find a strategy with an 8%, 14%, 20%, or even a 40% edge. For example, buying at major support could give you an edge of over 40% in many cases. That is a huge edge. It might not work out every single time, but the probability of it working out is really high. Over 1 million trades, you'll have a lot of winners and you'll have a lot of losers. As long as your winners are bigger than your losers and you keep your losers small, you will come out on top and be profitable. Keeping your losses small is essential in trading. I cannot emphasize this enough. The people who end up winning the most are the people who stay in the game long enough to preserve their capital until crazy run-ups happen. Then they go all in and they go really, really hard when the crazy run-ups actually happen. And then they cash out when key levels are hit. Traders, it's nice to think of traders more as risk managers rather than traders. Trading requires incredible self-control and emotional and psychological strength, as it's mostly a psychological game. Those who make rash decisions probably shouldn't trade. Now, just as how there are different investment strategies, there are also different trading strategies as well. They include long-term swing trades, which are trades that can take anywhere from a week to 12 months. Usually trades that exceed 12 months are considered investments because they are taxed differently when compared to trades that are closed in under 1 year. Long-term swing traders look at the monthly, weekly, and daily charts. They don't really care about the 1 minute or 30 minute or 1 hour charts. They might use the 4 hour to help pinpoint their entries and exits, but they're mostly focused on the bigger time frames when they're doing long-term swing trades. The second type of trade is a short-term swing trade. Now, these are trades that can take anywhere from 24 hours to a week. Long and short-term swing trades are easy to create and manage. Swing trading is great because it gives you a lot of time to set everything up, takes a lot less time overall, and it could yield extremely high percent returns. These are the set them and forget them type of trades. Short-term swing traders look at the weekly, daily, 4-hour, and sometimes the hourly charts. Maybe they'll use the lower time frame charts to pinpoint their entries and exits, but they're mostly using the 4-hour charts. Now there's the day traders. Now day trade happens when you open and close a position within a single 24-hour period. The regular stock exchange closes each day at 4 p.m., but cryptocurrencies are global, so they never end. You could easily get sucked into day trading and have it take over your entire life. An important statistic to remember is that over 90% of people who day trade end up losing money. A good analogy to compare day trading and swing trading is to think of them as different difficulty levels of the same video game. Swing trading is level 4 and day trading is level 8. You use all of the same techniques and indicators, but the action is much faster. So you have to be able to think and act quickly. If you don't know what you're doing, I don't recommend day trading. However, if you do know what you're doing and you have the time and it's your career and you track your trades and you end up going on a winning streak, you could definitely make a lot of money day trading. Day traders typically use the 1 minute to 1 hour charts. And then finally, the last type of trading technique or strategy is scalping. If swing trading is level 4 and day trading is level 8, then scalping is level 10 difficulty. Scalping is when you get in and out of a trade really, really quickly, like within minutes. Scalping is for very advanced traders and it's not recommended. Scalpers typically use the 1 minute to 30 minute charts. And now just as swing traders don't care about the 1 minute charts, scalpers and day traders don't usually care about like the monthly charts or the weekly charts or the daily charts because they're going to be out of their trades so quickly. So now that you understand the different types of trading and investing, you need to decide which strategy you are going to use. You need to choose your trading and investment style. Do you want to spend your days in front of the screen scalping and day trading for 2 to 8% profits at a time? Or do you want to spend less time in front of the screen and be a swing trader who aims for 5 to 50% plus gains over the long period of time? What you decide to do is up to you. Choose whatever style you want to trade and invest and stick to it. If you want to do a little bit of everything, learn one trading strategy at a time. Also, have separate accounts for each style so you can keep track of what works and what doesn't work. Having an investment account that you weighted dollar cost averaged into is essential in my opinion. I have an account that I invest into Bitcoin, Ethereum, and XRP every single week without fail, no matter what, and I never withdraw from that account. And of course, I have my Snowball account that I invest into every single month as well. I also have a trading account for swing trades and an account for the shorter day trades. The important thing is that you find your style and you find what style works for you. Hey guys, what's up? So I realized while I'm editing this video that it's really long and there's a lot of information in here. So I'm going to break this video down so that you could get more easily digestible pieces instead of just getting a whole 2-hour video all at once and it's going to be way too much overload. That way I could have a summary at the end of each section, and then you could better understand what you just heard. So let's go over what we just covered in this video so that you have it all down. And then when you feel like you have the contents of this video down, you click on the second video in the series where you'll learn all about analysis and the different types of analysis that traders and investors use. So let's go over this video right now. In this video, we covered what makes a market. In a general sense, a market is simply made when buyers and sellers come together and they trade an asset. That's really how simple it is. We talked about investing and what it is, which is basically a long-term approach. And we talked about different investment styles. I gave my personal favorite investment style, which is weighted dollar cost averaging, and I gave you my favorite app that I use to invest in, which is Snowball Money. We then talked about trading and the differences between trading and investing. We talked about how you could be a successful trader by finding your edge. Then we went over the different trading styles that you could use, and I gave you my personal favorite trading style, which is short-term swing trading. In part 2 of this series on how to trade and invest Bitcoin and cryptocurrencies, we're going to dive deep into the analysis, the technical analysis, and the fundamental analysis of trading and investing into Bitcoin and crypto. We're going to go over things like charts and candlesticks and things that traders and investors use when determining where to buy and sell. So if you haven't already, be sure to smash that like button if you're on YouTube. And if you haven't yet already, sign up to the free cryptocurrency course that I have at free.cryptolete.com, and I will see you there. Peace out. I'll see you in the second video in the series. Go click on video number 2. See you there.